tell you about a taxpayer who sat across from my desk a few years ago. Successful guy, nice house, good job, good family. He slid an IRS notice across the desk and said, James, I haven't slept in 3 nights. I looked at the balance, $28,000, not 280,000, not millions, $28,000. Yet he was convinced that his financial life was about to fall apart. He thought the IRS was going to take his bank account. He thought they were going to garnish his wages. He thought they might even take his house. The interesting thing, within about 30 minutes, we identified several options that could help resolve the problem. A few weeks later, he was on a payment plan and sleeping through the night again. The tax problem wasn't what was keeping him awake. The uncertainty was. And I've seen that same story hundreds of times throughout my career. I'm James Duff, CPA with Duff CPA Tax Resolution Services. If you owe $10,000, $20,000, $50,000, or even more, this video may be one of the most important tax videos you watch all year, because most taxpayers are worried about the wrong thing. They're worried about what the IRS might do. What they should be worried about is doing nothing. Every year, millions of Americans find themselves unable to pay their tax bill in full. Some sold stock, some withdrew money from retirement accounts, some went through a divorce, some simply had a much better year than expected and weren't prepared for the tax consequences. Life happens. The IRS sees these situations every single day. What the IRS does not like is silence. So let's talk about what actually happens when you owe the IRS money. Suppose you file a tax return and discover that you owe $10,000. You don't have the money. Now what? The first thing that happens usually, nothing dramatic. The IRS sends you a bill. That's it. No one shows up at your house. No one takes your bank account. No one starts hauling furniture out the front door. You received a notice requesting payment. If you don't pay, you'll receive additional notices. The language becomes progressively stronger. Interest continues to accrue, penalties continue to accrue, and the balance slowly grows. At this point, taxpayers make a terrible mistake. They stop opening the mail. They become afraid. They avoid the problem. And that's when things begin moving in the wrong direction. If the balance remains unresolved long enough, the IRS may file a notice of federal tax lien. A lot of people hear the word lien and panic. A lien is not the IRS taking your property. A lien is a government's legal claim against property as a creditor. Think of it as the IRS putting its hand out and saying, if this property was sold, we want to be paid too. Now let's say you continue ignoring the situation. Eventually, the IRS may move towards levies. A levy is different. A lien is a claim. A levy is an action. A levy can affect bank accounts, wages, and certain other assets. But even here, taxpayers often imagine something far worse than reality. The IRS collection process usually involves multiple notices, deadlines, and opportunities to respond. The IRS tells you what it intends to do before it does it. One thing I've learned after years of dealing with the IRS is that the agency is actually fairly predictable. The IRS sends notices, the IRS gives deadlines, the IRS explains the next step. The taxpayers who usually have the best outcomes are the ones who engage early. They open the letters, they ask questions, they establish payment plans. They become part of the solution. Now let's talk about those options. If you can pay the balance in full, wonderful. Problem solved. But many taxpayers can't, and that's okay. The IRS has programs designed specifically for taxpayers who cannot immediately pay. Many taxpayers qualify for installment agreements. Others qualify for penalty relief. Some may qualify for hardship status. And in certain situations, an offer in compromise may be worth evaluating. That's the program you've probably seen advertised where taxpayers settle their debt for far less than the full amount owed, but not everybody qualifies. The IRS looks at income, assets, expenses, and your future ability to pay. The right solution depends entirely on your financial circumstances. That's why when a taxpayer calls me, the first thing I want are the facts. How much is actually owed? What are the years involved? Have all the returns been filed? What notices have been issued? What stage of collections are we in? Only then can we determine the best strategy. I've represented taxpayers who owed $5,000 when we're absolutely terrified. I've also represented taxpayers who owed hundreds of thousands of dollars and successfully resolve their cases. The amount owed matters, but the speed at which you address the problem often matters more. At Duff CPA Tax Resolution Services, we help taxpayers understand their situation, evaluate their options, and develop a practical strategy for moving forward. Unlike many large tax resolution firms, you'll work directly with a licensed CPA from start to finish. No call centers, no salespeople, no pressure. Just honest advice on your specific circumstances. And here's the most important thing I want you to remember. Owing the IRS money is a problem, but it is usually a solvable problem. The worst thing you can do is ignore it. Open the letters, understand the facts, explore your options, and take action. If you'd like help evaluating your situation, contact Duff CPA Tax Resolution Services at 203-589-4077. I'm James Duff, CPA. Thanks for watching, and don't forget to subscribe for more videos on IRS notices, tax debt, and tax resolution strategy.